Hello, everyone. Happy CPI Wednesday. CPI Wednesday. There will not be Sterling in the chat today, so you'll have to rely on me for the news. Good morning, Mark. Good morning, Patrick. Thank you, Patrick. It was a teaching session. Again, if you missed yesterday's, you should just rewatch, not for the market analysis, but for the talk about trade expectancy. Thank you, Patrick, and thank you for tuning in. Good morning, Jacob. Good morning, PMG. Hello, Charles. Hello, people in the background. Sorry, I'm a little tired today. Been up since 2 a.m. One of my dogs had me up and never got back to sleep. So, it's been already a long morning, but we still have to deal with the numbers that came out. We had inflation numbers coming out today. The month over month for the headline number coming in at 0.2, year over year dropping to 2.5 from 2.9 previous. A little more concerning, and this is why I don't think they could do 50. I don't even think they should do 25 yet, but because I think inflation is going to pop back up in a few months. But core inflation, 0.3 versus 0.2 expected. Super core is also, it's not on this list, but super core was also up. Okay, especially services inflation is getting very, very sticky. So that's what we have today, right there. Tomorrow, remember, we have the PPI and the unemployment numbers. And the only stuff left for today is for crude traders with the EIA numbers. So that's where that sits. Everything's out of the way right now. Market looks like it's firming up a bit in terms of the mega caps right now, and oil's a little stronger after the little micro bounce in crude. We have energy, basic materials, and common services leading, real estate, industrials, and financials lagging. Fed watch now. We'll just do one more refresh of this since it's a CPI day, but it looks like the 25 basis point is pretty much getting locked in for next week. And then you have a double cut still priced in it's not locked in, but it's priced in for November, right after the voting day. We're still in fear mode, and remember, the market is still insanely overvalued, 35.33 from a Schiller PE. We had GameStop missing on revenue yesterday afternoon. Nothing really this morning. It was all about the CPI. Tomorrow, keep an eye from on Kroger, even if you don't trade it. Anything they say in regards to inflation and food and the consumer. And then after they close, you got Adobe, Restoration Hardware, which are the big ones. But nothing that's really going to move the markets. All right. So we had a little mini sell-off. We're still in yesterday's bar. We're still in yesterday's range. Inside day so far. Hey, Ted, how you doing? Good morning, Royal Palms. We can look at Apple. Yeah, Shelter was pushing CPI up this month. Good morning, Heinrich. Good morning. Good morning, Anissa. All right. Here is exactly what I'm paying attention to. Yesterday's high. We start breaking above yesterday's high. 55.32 is my first target, and then if it really went on our tear, I would not ignore an intermediate target of about 55.45, and then 55.66, as I talked about, is the key critical target. Technically, 55.66, 25 on a closing basis for any time this week. Closing above that, we then target retesting end of August highs. Now, here's a little quick reaction. You can see it here on the 15-minute. Boom, boom. Already buy the dip is back in. But here, if we do roll over into the open, you see the selling pressure yesterday before the end of European closing time area bounce back. You see the selling pressure on Monday. You see the selling pressure. So here's the key area I'm watching. It's right around yesterday's low. It's right around 54.48. Why? If that were to break, it could be a pretty quick move back down. But that's a key support area that I would be watching if we do sell off. So that's my first key area if we do sell off, and then I'd be looking at about 54.28, and then a retest of the lows if something really wipes out. Now, with that out of the way, it's going to be if the buying pressure comes in on the open. It still seems like it wants to try to push up, especially this 50% harmonic area. NASDAQ already taking out yesterday's highs. The key areas for me, 18,950. And then the next major area for me is 19,182. The little other areas I'm looking at, really key on any pullback besides the little spike low area. You see there's a sell-off from the initial CPI print, and you can see it lines up really nice with the candle bodies there. So intermediate is about 18,733, but if that breaks your major level to watch is 18,600. The Dow still down a bit, not bouncing back like the other ones. The Dow has very key for the Dow is the close from last Friday. Pay attention if it starts giving up the close from last Friday, which is 40,407. So 40,400 is very key. To the upside, at this point, I'm taking off this level, and I'm watching yesterday's high area, which was right around 40,989 to 41,000. That's my key resistance area. That's very significant resistance. Dow also inside yesterday's range. The Russell on any bounce back, very key is this 2106 area, and then if it breaks higher, 21, what is that? 2121. Oh, wow, can't even see today. 2057 is key support. The VIX continuing to drop. Going to be watching the 18 handle today. 18 handle, especially if we rally. The yield, little reversal after the stronger core coming in the super core. But remember, any bounce in this, we still have the rollover zone. There's no strong bottoming pattern yet. There's a reaction on the CPI print. So on any backfill, I'm watching about 3.64 as key support. You see the notes. Take it fit. Oh, by the way, the notes completed the 87.5 rule. Coming up to the next minor harmonic level and then reversing. So could we easily pull back? Yeah, but the rotation zone is the key support about 114.24. 10-2s still stalling out at that first target, but it's really about 5 basis points is the key pullback area on that. Dollar index. Remember, we've stalled out at that 87.5, but if the dollar index closes above 101.52, then we could see more dollar strength. It's trading against very key resistance today. So and it's trading against a flattening out rotation zone. So it's chipping away at the rotation zone, but the only thing was that percent B buy so far, and then it has to follow through. So worst case, if the stop was not always raised, it would be below today's low that was set just prior to the CPI. That would be from my perspective. Crude, little bounce here. Now remember, from crude longer term, look, we're in a very critical area. Look at all the prior lows in this area. This is a weekly chart. We're trading against a major support area. Is there a major bottoming pattern yet? No, there is not. And any bounce pattern, I just watch for that key area of even 68.75 is very major resistance. I'm starting to really keep an eye out for a longer term base in crude, but there isn't one yet, at least from a technical setup pattern. Natty gas, which we also talked about yesterday, trying to chip away, trying to trigger the double. Excuse me. But this is a stair-stepping double, so I'd really pay attention to the low area right around 21.12. Because if you get a close below that, you could easily see the retrace that would invalidate that potential double bottom. Other than that, still watching for it to trigger. Gold, very muted reaction off the CPI numbers. Nothing to talk about, still watching the bottom of the rotation zone. What else do we have? We have the yen. The yen was strengthening and falling back with the dollar strength coming in after the CPI report. But this is sort of interesting in terms of the yen carry trade. We'll be watching, though, to see if this sets up for a %B bounce by tomorrow. Euro, nothing really to talk about. No great setup patterns just yet. Your key area I'm watching is right about this 109.80. Spiders in the Qs. Spider trading pretty flat to yesterday's close. The minor levels on a rally, 551.80 and then 554.93 on a closing basis. Again, your key support is watch yesterday's lows, about right around 543. The Qs trading into some very significant resistance, a slight gap up, so any rollover play would be yesterday's close, 458.66. The key area on the Qs, the key areas I'd be looking at is about 462.20 to 463.20 as a key resistance on a rally today. That's the key area I'd be watching. Not much out of cryptos this morning, so not much to talk about. Nothing's really changed there. Hey, Christoph. Hello, hello. Good morning, Richard. Other than that, NVIDIA, still looking for the next rollover play. Remember, daily cycles are going up. So we could continue a weak bounce play, but we'll be watching, especially if we get up towards the 21 and the 50 EMAs. That's what I'm watching there. Nothing to talk about with Tesla. It seems like there's just a lot of, the more bad news Tesla has, the more there's buying pressure in it. Apple, which was requested. All right. We still have, let's look at the bigger picture first. There's still a massive potential weekly double top. In the short term, you might be wondering why I have the little mini double. You could say here, well, your rules say if the second and third target cuts into wicks, yes, on the daily, it's not valid. However, on the 4 hour, it is. The 4 hour, Apple has a little mini double. With it still have to close on a 4 hour basis above 225.48, 229.47, 231.47. Okay, there's been a lot of buying pressure around this 217.50 area. There's been a lot of buying pressure over the last couple days. That's why I'm keeping an eye on this. However, without the little mini 4 hour doubling triggering, I'm leaning at some point this 417 area is going to break, and we could see a pretty quick move back down. So the only thing that changes my bearish stance in the short term is if this double triggers, the 4 hour double. Other than that, targets would be about 214.50, then 209.85, so 210. There's your Apple. Remember, who was asking for Apple? There it was. There you go, Royal Palms. Sorry, I forgot it was you that asked for it, but there you go. There is really not much else to talk about. Not a great lot of setups. We still have unemployment numbers and PPI tomorrow. Let's take a look back at the PPI. Where's my window gone? There it is. Because tomorrow, PPI is expected to, core is expected to potentially bounce back up. So from flat previous. So we could still get some short-term inflationary readings to reinforce the core and the super core today that was higher than expected. So let's see how we're not out of the weeds yet in terms of numbers coming out. And then you have consumer inflation expectations, the preliminary numbers for September. So we can't just walk away from this week yet and say, all's clear. Let's just go in full-blown bull mode just yet. But in the short term, going in the open, if it manages to break through this key resistance area is trading at right now again, 55.32 would be my first primary target. With that, there's no need to dwell on this. There's no need to take up people's time anymore. I hope everyone has a wonderful trading day, and I shall talk to everyone later. Bye for now.